St. Louis's apartment market fits pretty well with the storyline for the nation as a whole. Jobs start to come back, occupancy is climbing again, but still not great, and rents are moving back up. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your St. Louis update. In St. Louis, overall occupancy is now at 93.7%. That gives St. Louis some bragging rights over Kansas City, which is 1 point behind. And St. Louis's occupancy rate is up a half point in third quarter and 1.7 points in the year ending September. And rents are starting to move up as well. Same-store rental rates jumped 2.1% in third quarter. That is one of the biggest increases in the Midwest behind Columbus and Chicago. An annual rent change in St. Louis registered at a positive 2%, and that number would have been higher if not for deep rent cuts in late 2009, which has been the story pretty much everywhere. And look at some submarkets in St. Louis. Two of the best have come at the north end of the metro, North St. Louis County and St. Charles County. Let's start with St. Charles County. St. Charles County leads the metro with an occupancy rate of 95.4% as of September. This is one that's really come on strong in the first 9 months of 2010. And you can see in this occupancy chart that occupancy bottomed out at 92.1% in late 2009, but it is up 3.3 points since then. And now occupancy is slightly above the level seen prior to the recession 2 years ago. And rental rates have been jumping in St. Charles in each of the past 3 quarters. They climbed another 1.1% between June and September, and effective rents are up 2.5% year over year. And like the metro as a whole, that number would have been higher if not for cuts in late 2009. Now let's also take a look at North St. Louis County. This is a submarket where occupancy is still very weak, just 90.7%, but occupancy is typically pretty low here, and that's largely due to underperforming lower-tier apartments. In fact, there are a number of very affordable apartment properties that have occupancy rates in the low 80s or even the 70s that have really pulled down the submarket as a whole. And we look at only upper-tier apartments in North St. Louis County, overall occupancy is closer to 95%. So you have a big discrepancy in this area. But nonetheless, for the submarket as a whole, occupancy is up 1.3 points annually. But the big story here has been rent growth. Same-store rents are up 2.2% in the third quarter and up 3.2% annually. And of course, that big rent growth has been driven by the top end of the market. Now, looking at St. Louis's apartment market as a whole, rent growth has really been driven by those two submarkets plus the urban core. But going forward, we do expect as occupancy rates start to improve again, that rent growth will extend to other parts of the metro as well. So that wraps us up for St. Louis. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.